A very warm welcome once again to the Ask the Investor webinar from the Africa Fintech Summit in Ibex Frontier. We have two impact and angel investors with us this morning. We're going to introduce them to the panelists first, and then we'll move on with the question. Our panelists, feel free to put your questions in the question and answer part, and we'll address that to the panelists. So Kunle and Isaac, a very warm welcome. I will ask you first to introduce yourself, your background. I know you both came from a Wall Street bank. You were both vice president at Goldman Sachs, but now you are impacting the angel investors in Africa and African tech. So maybe if you can give us a background and then address why you decided to do impact investing in Africa. Maybe Kunle, you can start, and Isaac, you can follow.
Thank you, Zekarias, for the invite, and very happy to be here with everyone. Hopefully through Isaac and I sharing our journey, I think I'd like folks to walk away with is A, feel motivated, but also B, find their own ways and their own path towards contributing to whatever it is that drives their passion. And you're going to know from Isaac and I talking that Africa is definitely a passion of ours and has been for quite a while. A little background on me, my current role right now at Capricorn Investment Group is really to lead the institutional growth of Capricorn as a mission-aligned, impact-focused outsourced chief investment office. That's a lot of big words. Essentially, what that means is for asset owners, foundations, family offices, pension plans that are looking to integrate sustainability and their overall mission into their portfolio, rather than do it and build it themselves, they can outsource it to a firm like ours who would help do that because we specialize in doing that. Why do we specialize in doing that? We've created and built the portfolio for both the Skoll Foundation and Jeff Skoll, who was the first president of eBay and made his wealth in 1999 when eBay IPO'd. We've, in partnership with Jeff Skoll, created Capricorn to manage his assets as well as the Skoll Foundation's assets. So we're the CIOs, the chief investment officers for those entities. And over 2 decades, we've been able to build a diversified, balanced portfolio for these entities, but it has sustainability integrated into every single aspect and every single asset class of the portfolio, both on the public side and the private side as well. And what we're hoping to do with me joining Capricorn is create it at that institutional scale to go to other asset owners and do the same thing that we've done with the Skoll Foundation and Jeff Skoll for the last 20 years. And prior to that, I came from Goldman Sachs, which is where I met Isaac, and we've been brothers in the trenches for quite a very long time, across regions, across multiple locations, across different strategies and efforts. And I consider him a very dear brother, just, professionally, personally, and in all walks of life. I have a degree in chemical engineering, and I think Isaac and I share that, and I'll leave that thunder for Isaac to sort of deliver. But very passionate about taking all that I have learned in my professional career and applying it to my personal passions, of which Africa is one of them, and we'll go more into the why later. So passing on to Isaac for his own introduction.
Thank you very much, Isaac. Isaac, we can't hear you.
Can you hear me?
Yeah, we can hear you now.
Okay. Yeah, and thanks, Zach, for the introduction and the invitation to participate. And obviously, as Kunle said, known Kunle now for well over a decade. I was introduced to him a few months after I joined Goldman Sachs, and one of the managers was like, "Hey, come meet some guy, and he has the same background as you. He did chemical engineering from Nigeria," and I'm like, no brainer. So, I'm in this conversation in my personal capacity. So hopefully, a lot of you that are on here and thinking like, hey, you have day jobs, like, does this make sense? Hopefully my own stories I share here can resonate. As Zach mentioned, as my former employer for well over a decade, he did a number of different roles and across regions. And then more currently, I'm in an investment performance role with a private equity firm, that has various strategies, including, venture, like real estate and traditional like credits asset classes. And from an Africa perspective, I grew up in Nigeria entirely. I actually went to college in Nigeria. I did chemical engineering at the University of Lagos, and came out to the US for grad school. And so there's always a part of me that was back home. I mean, obviously my siblings and relatives and stuff are back home, but there's always a part of me that wanted to contribute. And yes, while I was here, like in US, initially in Utah, I always did a good job of like building community wherever I was to get a sense of belonging. But more recently, in the past couple of years, I've leaned towards like angel investing as a way to mentor amazing founders of African descent that are on the continent, and some not on the continent, maybe in the diaspora, and then use that as a way to not just like support them with words, but also like put in that like tiny check, and see outsized returns, and in some cases, like even if it doesn't work, like at least like I would have learned something on that journey. And so, hoping that through this webinar, we can share some of that experience and take questions from people.
Fantastic. Thank you so much, both of you. So let me circle back to Kunle. We'll talk about impact. So if I'm a founder of a tech company, I say, well, I create employment, I empower the youth, maybe I can also do women empowerment, I pay taxes. So everything I do in the continent is impactful. So I should be deserving to get impact investment. So how do you define impact, and how can founders actually can articulate, yes, my startup qualifies for impact investment? And then followed by that, maybe Isaac, if you can touch angel investment, it depends on the stage of the startup, angel investment, seed, pre-seed, Series A. At what point do founders should seek out for angel investment? What is the landscape of angel investment in Africa? So maybe you can start from with the impact investing, please.
Absolutely. So the word impact is very subjective, and a lot of people know that it is, which is also why it gets a lot of scrutiny in the news, is because it's based on people's definition, and there's yet to be a standardization from an industry perspective to really define it in a very clear, unique, concise way, which a lot of people look at as a problem, but I actually look at it as an opportunity for anyone that is a thought leader in this space to really emerge with their ideas and the way they think it should be. To give a little bit of background, and I know it's a bit of a tangent, while I was at Goldman, I worked within this sort of derivatives market, and I saw what ISDA, which is the International Swaps and Derivatives Association, did for the derivatives market. When investors lacked confidence, or they had questions, or there was complexity in the market, ISDA was there to answer those questions and really guide the way things were going. Right now, within impact investing and ESG investing, there isn't that one body that really guides the conversation. And so it really opens it up to multiple different interpretations and conflicts in terms of how they really define things. But why would someone call themselves an impact investor from just a traditional investor? It's really the measurement piece of impact, right? I can tell you right now, the business, I think every business has impact, period, right? And it depends on what intensity or scale your impact is. The real key here is, can you actually measure it? The same way to stakeholders, you basically say, here's my ARR or MRR, and here's how I'm measuring my financial performance. Can you use the same methodology and framework for impact to say, here's how many X, Y, and Z metrics that I'm measuring for this month, for this year, for over this quarter. And so an impact investor versus a traditional investor really thinks of what we call the double bottom line, right? Not just looking at the financial return as a bottom line, but what is actually the impact measured as a bottom line as well. And when I say impact measured, there's a slew of metrics that you can use. And depending on the theme that you're looking at, whether that be education, healthcare, clean energy, sustainable transportation, each of these have their own unique set of metrics that you use to measure impact. For simplicity purposes, let's take education. That could be number of students reached. That could be access to educational tools that weren't there before. But what are those very tangible, measurable, quantitative things that you can measure that are a direct output of your business model, and you can track over time? My favorite quote now that I use all the time is, you can't improve what you're not measuring. And I think in the past, people do claim that their businesses have impact, but they never really measured it for anyone to quantitatively say that it is true. And a true impact investor actually takes the time to understand what are those metrics that he needs to measure and how to quantitatively measure it, but not just measure it. How can it dynamically be used to educate and share the purpose of why your business exists? And those are the types of businesses that I look for on the continent. To frame it a little bit narrower on the continent, the example like I'm using now too as well is, think of Uber. 10 years ago, Uber was not a part of your logistical planning when you wanted to walk out of your house. Now, I can't think of not factoring that into my transportation logistics overall, whether I take it or not. How do we build tools in Africa today that are very organic and second nature to the population and the youth 10 years from now, where if they're ordering food, if they're going to school, if they're getting healthcare, these are those types of apps from a technology-based standpoint that they would naturally gravitate to because it is efficient and it gets the job done. And so I've really narrowed a lot of the work that I've done on the continent to find founders that are building those tools that become very organic to the way the youth right now, when they do get into a position of power or authority or a position of influence, are just used to using and because it provides efficiency for how just life gets done in general.
Fantastic. Thank you so much. That is a very wise advice for startups. Make sure you measure, report, and also make that available to the investors if they have an impact in the continent. Thank you.
That's right.
Isaac, over to you.
Yeah, and to grow on top of like what Kunle said, like from an angel investing perspective, like just generally, everyone on this call should know, like an angel investor is literally anybody that puts money, right, like in a business for exchange of equity, either now or in the future, or debt, like, or even participation in the profit of that company. So, potentially, like everyone on this call at some point in time has done that. So, congratulations, you're an angel investor. But more recently and more popularly, this has been ascribed to tech startup investing. And it's probably because of, like just the buzz in that space. So with respect to Africa, obviously we've seen, like the exits, like Sendwave's acquisition by World Remit, like, way back then. And then, subsequently Paystack's acquisition by Stripe, and people getting outsized returns from those acquisitions. So like double digits multiples on their invested cash, and everyone saying like, well, how can we participate in that? So I actually like the attention to that space, because ultimately when you think of like wealth inequality, right? Like a huge component of wealth is like ownership, right? And ownership, whether it is like real estate or like business and equity, the other areas of ownership are more common, right? But in terms of like business, most people historically have just thought of like, well, I would invest via a mutual fund, I'll invest on a stock on the exchange. But in recent times, most companies have taken longer to go public. And so the importance of like education around like what angel investing is, and the fact that you can actually tap into that at the early stage of an innovator's journey. So Kunle is the example of Uber. My honest and genuine view is that, like talent is everywhere globally. So even if there's an innovation in one corner of the world, there's no reason why that can't be replicated and even done better, right, on the African continent and with local knowledge, right? And people are doing that, right? So people should spotlight that. So my view is, there should be an opportunity to fundraise, right? And then why angel investing education is necessary and why angel investors are necessary, both by people on the continent, people in the diaspora. We should be included in groups, right? Like, we shouldn't miss out on the next like Amazons, on the next Apples, and the next Googles, right? Because, well, we just like didn't fund our own innovators and entrepreneurs. And so that's a huge part of like my push to not only invest in like the upcoming innovators in the continent, but also like share that information with people, right? Either through webinars like this or just, like advocacy in general.
Thank you so much. Very much appreciated. As we're discussing, we'll also invite the audience to participate in this poll about angel investing. So make your choice where Africa is right now. What is the most needed investment type? So let's move on to the second part of the question. So in 2022, we wrote an editorial, and we said that African seed investors, founders, turned investors, and Afropreneurs with deep local expertise will continue to lead the pack in deal sourcing, seed investment, and growth stories. And we've seen that in 2022. Founders turned into investors, operators, and finance professionals like you too have turned into angel investing in Africa. So my question for you is, how do you source deals, both in Africa and also in the diaspora community? How do you select your potential investee portfolios? And what kind of criteria do you have? Do you have any leaning, preferences, sector, geography?
Yeah. Look, I think a big part of what Isaac and I have been doing is evolutionary in nature. I don't think where we started is where we are right now, but part of learning is just doing it and starting. And I think that's one of the biggest lessons that I've learned throughout this whole process is just get started somewhere, and through that experience, it'll inform you, or there will be things that you would learn about yourself or what you want to get to that get refined. But you can't reach that stage if you don't start. I think we've been doing this now together 4 or 5 years, more seriously in terms of combining our intellectual capacity and resources and backing founders. I've eventually evolved to a 3-pronged approach investing on the continent. One is backing female founders and co-founders, either on the business standpoint or on the fund manager standpoint. Yay for gender parity, and it should be what normally should happen. But at least from a risk management standpoint, my mindset has evolved in that when you have a woman who's a true owner, not just someone that you put on your pitch deck and say they're part of our team, but like true ownership, has equal equity, the decision-making process changes on the continent when you have a woman involved there, right? It removes a little bit of the element of bro culture, which oftentimes can lead to just very hasty decisions that more long-term don't help with the growth of the business. And just through observation, I've just found that having a female or woman as part of the decision-making process changes that dynamic and changes the way business decisions are made overall. So I'm really focused on ramping up sort of my involvement and deployment of capital into businesses that have that element specifically. Right now, my portfolio is roughly 67% women-led or co-led. And my real goal is to get to 75% plus. And again, really backing women founders in terms of guidance as well as support. Oftentimes with the founders that I work with that are women, they've never really been in a structure where they know how to make sound business decisions, or they know what next steps to be made in situations they've never been in. They've not been in the boardroom to do that. They've not had that training per se. And so having me as an advisor, or having Isaac as an advisor, really gives them guidance. And I'll give an example. One of them didn't get into a particular program, and she told me, I'm just going to send them a note, saying thank you and move on. And I was like, okay, send them a note and also ask them who else at their institution does this type of work that they can connect with, and what next should they think about for next year. That is what an aggressive male founder would do, somebody who's looking for money. And giving her that perspective, I could see sort of the light bulb, like, well, I didn't want to be too aggressive. But getting someone in your corner to say, yeah, you should do it. It doesn't come up as aggressive. Just go ahead and send that. And, as you would have it, the other side was happy that they reached out, because they say, usually we say, reach out to us anytime, and people don't take them up on that offer. But they were really glad that that female founder did take them up on that offer. And now the relationship is a lot stronger, and they're poised to possibly get that sort of position next year, or this year particularly. The second approach is investing in businesses that have measurable, tangible environmental and social impact. So I kind of define the metrics. Don't just tell me my business helps X, Y, and Z people in this region. Like how many people who before your opportunity existed, what were they using before? What are the alternatives? Why is your business different from that? How are you measuring the effect of what your business is doing overall? Now we're getting into a very qualitative space, but trying to quantify it into numbers. It gets harder on the social side, in healthcare, in education, in financial inclusion. It's very hard to measure. More on the climate side is very direct. Like you can think of carbon, you can think of regenerative agriculture, you can think of emissions. Those are more mathematical or methodological in nature. But on the social side, it can start to get very subjective. So if as a business, you can tell me how you're measuring your impact, then it's something that I definitely want to listen to. And then the third thing is what I call value-based tech-enabled businesses. So there's a lot of push and funding into fintech and financial inclusion. I try to look outside of that and try to find other sectors of the market that have been underinvested and where digitization can help usher them into sort of a new era of how we do things. So think about education. Everybody goes to school, you have a teacher, you come back home, right? How can we redefine that in the African context where you can now have more access to educational content? For example, in Kenya, a lot of the ed tech that people use is YouTube. They just go on YouTube and that's how they learn, right? Can we build tools and businesses that really channel and define what educational contents look like within a specific box outside of a big, broad platform like YouTube, right? And so looking at those types of businesses that add value, that are tech-enabled, also, I have zero trust in the African government. So anything that they can touch their hands on, infrastructure, asset, land, I want nothing to do with it. I want something that's a little more within the internet framework, and I truly believe that this is the way we can usher ourselves out of sort of the mess that we're in as an economy, is really plugging more into the digital economy and ushering into this new era. And then last thing I'll leave with is, someone told me this, and I think it's actually true. You can go to the most rural areas of Africa and you'll find Facebook there before you find the toilet. And that really struck out to me as like, people want to be connected to the internet, right? People want to be plugged into what is happening more and awareness on that global scale. So how can we channel a lot of that energy as a continent and help find sort of economic and opportunity, prosperity for a lot of the people who live on the continent, to be able to find other sources of being able to find wealth generation and opportunities to grow in general. So I'll leave with that, but those are my three-pronged approach to investing on the continent and how I look. And it's broad across Nigeria, South Africa, Egypt, Senegal. I've been able to look at the entire continent and see where we can find opportunities.
Fantastic. Thank you so much, Kunle. Isaac, what is your investment thesis?
My thesis, and I would caveat and say, Kunle's point on it being evolutionary is very key. But like at the start, you may not necessarily have one, and that's okay. I spent 2 years chasing deals all over the place, like 2017, 2019, and it was like, no, like, minimum check size or all of, like, there was like many reasons for the no, right? And I was like, just get me one, just one. But fortunately now, like deals just come, like, mostly referrals by existing founders that, like someone has supported, or friends like yourself, Kunle, just like bringing up like amazing folks to chat with. But my thesis is along the lines of Kunle, in terms of like the deals I invest in, they have to be like Black founded, so either the co-founder or like the CEO has to be Black, whether on the continent or in the diaspora, it doesn't matter. Like Black people just don't get funding, so like if I'm going to like put my capital to work, then you can call me Justice Capitalist. Like it's Black founders and it's tech enabled, because again, I don't have energy to fight like Kunle said with like like hard projects or like infrastructure or like stuff. It's something that I'm closer to in terms of like being here, and I can monitor online, and I can actually support. But my thesis has evolved to like basically work, wealth, and wherewithal. Work from a perspective of like, does the solution actually work? Like, do I see myself using it? Right? Like, can I use it, or do I know people that can use it and I can refer to? And if it works, then is it better than existing solutions, right? Like in terms of like pricing stuff, not discount, like just by itself, right? Is it practical? And the wealth part is like, like is this something that can scale, right? To generate wealth, not just for the founder, but for the employees, for me, myself, as a potential investor? Because if something works, right, and I'm going to use it, then yeah, I'm also going to invest in it, because then, we're talking about shared prosperity and just being included, right, in the growth. And that's key. And then where it all is like, that part can be finicky, and it's like, does the founder or people within the founding network, or other investors, or me myself, like, do we have the network to actually like influence the outcome and make a change? And I did an investment like a couple of months ago related to, like, had no clue what that industry was. It's a media related, like marketing media related investment, but like I'm not close to that. Like, it's not technically like a tech enabled business per se, but I could see, in speaking with the founder several times, like I could see how my existing portfolio companies had this need, right, in terms of like some to write press releases for them, like investor updates, or even get through applications of stuff. And I'm like, oh, if this person can serve my existing founder and serve them well, then maybe there's an opportunity here. And I was like, okay, let's have you introduced to this couple of founders that need this stuff the most. And the referral and the reference from like just those two conversations were awesome. And I'm like, okay, this is a no-brainer. I have to invest in this business, even though I don't really get what they're doing, like, initially. And so that's how my investing philosophy has evolved to now. Any company that can be complementary to my existing portfolio, from a portfolio construction perspective, I'm like, oh, this is going to enhance the entire basket. So yes, this is something to consider. And even if I don't invest, but at least like I would like bring them into the loop in terms of like introduction and referrals, and that relationship is naturally going to lead to an opportunity to invest when next they're raising. So
fantastic. Thank you so much, both of you. And this is quite interesting when we talk about African investment. It doesn't have to be also within the continent, because we know that there are tech-enabled businesses founded by the diaspora based here, either in US, Europe, or Canada, but impacting and operating in Africa as well. I know that you're investing on those businesses as well. Maybe can you tell us a little bit about your portfolios? I'm not going to ask you which one is your favorite great problem, but maybe what was the draw for you to invest in those companies?
Yeah, I think someone asked this question on some of the live questions, and I was trying to answer some of it as I was waiting. But someone asked, what are the underinvested sectors in Africa that I see? And I mentioned education, healthcare, food and ag, and transportation. Obviously, there's a lot more problems than what I've mentioned, but those are the ones that I think that I've been able to identify founders who are being thoughtful about innovative solutions to usher us into sort of a new era of how to think about things in this sector. I've spent time with founders within these sectors that I've mentioned, and particularly I've been very passionate about education, more so because as I think through what is the long-term fix to a lot of the problems we have, and part of the solution is educating the next future leaders now. I think COVID exposed a lot of gaps that we have on the continent, where you had kids who were out of school for a year. They missed a whole year compared to their global peers of learning. And quite frankly, that's just shameful. That's just something that shouldn't happen. That's time these kids would never be able to get back again. That's a delay in their learning process that they have to probably overcompensate for to just catch up. And this is not any of their fault, right? They're relying on their parents or their parent equivalent to build infrastructure and to build systems that can help them grow, because they don't know yet, they're still in the development stage of life. And so I've been really thinking about education and how to sort of invest digitally in education to help reach scale on a broader level, right? Right now, if you live in a metro city, you have some amount of wealth, most likely you'll go to private schools. But again, there's exclusivity added to these types of opportunities that not everybody can have access to. And that's where digitization helps reduce those barriers to entry, right? If you can find in some, remote village, a possibility, an area of similar to how we set up what we call cyber cafes, right? Where you just have a computer, you pay money, and like, can we create something similar to that where it's, and I'm making this up, an iPad with an edtech content, and kids can just come in and sort of learn on that basis, or have an opportunity to learn, in a library style format. I think that starts to improve scale. Now you don't need one teacher there teaching them. You can use educational content with animations, with more interactive tools to be able to engage students, to be able to learn. And we can do it. We can find a way to indigenously adapt it for the African content. And that's really key. It's not a copy and paste approach. I'm not thinking about, oh, it works in the US and it works in the UK, so it's easy transferable. And Isaac mentioned this, so I'm sort of doubling down on what he mentioned. Can we find founders who understand how to translate those opportunities into the African context? And so one of the companies that I've backed is really thinking about indigenously translating educational content. You want to learn math, English, all these other stuff, not really necessarily English, math, physics, chemistry, the rest of that, in Yoruba, in Igbo, in Hausa. And that's different, right? Nobody teaches those subjects in indigenous languages right now on the continent, except you have a private tutor that does that. And so having some app to be able to help you learn more things, and even for folks in the diaspora, right, that they want their kids to learn the native language, but don't have folks, right? Education technology can help provide a solution there where, similar to kids being on their iPad and watching sort of, Coco Melon and all this stuff, like there is an African app that gives them that same interactive component, but they're learning and they're growing at the same time. So that's just one example. Healthcare is another, insurance is another, food and ag is another, and I have investments sort of across that spectrum. And I'm constantly thinking of founders that are thinking about this in an innovative way. And last thing I'll leave is I come with my own thesis, right? So I'm not talking to founders and having them influence my own thought process. I have my own thought process. I have my own conviction. And then I'm now looking for founders that align with how I'm thinking about it, and I know can execute on those strategies excellently.
Thank you so much, Kunle. Isaac, can you tell us a little bit about your portfolios and maybe select one or two and then why you were drawn to them?
So I have a broad portfolio now, and the way I think of them is like the ones that I'm on the cap table of directly, and that's just about 20. The ones that I invested via a syndicate, right? Like I am part of a syndicate here in the US called Cap Table Coalition. Phenomenal group of like professionals, diverse professionals, so they're improving diverse check writers. I am also fortunate to be part of Afropreneur Angel Group on the continent. Like amazing group of angels, deal flow all over the continent. And then the third bucket, and that has like almost 30 now. And then the third bucket is increasingly becoming my favorite. So I call it my crowd raise portfolio via Get Equity. And that has about 20 names also. But it's crowd raised, so anyone can participate to like very bare minimum. But I use it to like just engage with like very early stage companies and like just monitor their growth and then increase my stake in them over time. They're secondary, or just follow up with them if they're doing like follow-on raises. My all-time favorites, still an easy question in terms of like, it's my very first check. And reason is because, well, it was my very first check. And second reason is because, well, the founders have gone on to execute phenomenally. And the third reason is because, well, they've now referred at least like 5 deals to me that I've co-invested in. So I would be eternally grateful to them. But in terms of like speaking about a deal in particular, I've actually touched on a deal that I think we all did together. So myself, you, and Kunle were involved in, and it's a very recent deal because, like this year is the year of AI, right? If you will, like we've seen like ChatGPT in the US and like the Microsoft deal. We've seen InstaDeep, like get acquired by BioNTech. We had this AI deal a couple of months ago. Black founder of Nigerian descent, based in Canada. Built this conversational commerce AI platform, getting a couple of like restaurants on board in Canada, and integrating it into the stuff. And we're in conversation with him about like how to take it to the next level. and fortunately got into his Amazon Black Founders program, and then next thing you know, the Alexa API is open to him, and then they're making introduction, and now the Siri API is open to him, so he's on the Apple Watch, and then he's integrating with Yelp, and finally got an opportunity to actually back him with funds, because we've been engaging in conversation, and so there was an interest there before. And so as people talk of AI this year, I'm like, guess what? I have an AI exposure, and so it's picking the timing to ride out opportunities, and ensuring your portfolio has exposure to whatever the latest thing going on. And I bet you there's always some Black founder somewhere working on every single sector or spectrum that you can imagine. If it's space technology, I'm sure there's a Black founder working on it. So it's finding those people, backing them, and ensuring that our own talent and our own innovators get the spotlight and get opportunities, and they're able to seize the moment, right? Because again, this is, the market is always evolving, right? 2020 was the e-commerce boom, right? Checkout and the rest of it going. Then there's going to be deliveries and all this stuff, and this year shaping up to be AI, right? So we shall see.
Thank you very much. Follow-up question. So I'm a founder of a startup. I'm looking for external investment, angel investment, impact investment, someone who can not only just write a check, but also support me. So what kind of both soft and hard qualities you looking from an investor, a founder? So what kind of qualities do you see, in addition to the company itself, the idea, the technology? What qualities do you want to see from the founder? And what kind of due diligence do you follow for you to be able to say, yes, I want to support this business. So I'm a founder, I reach out to you. What will be your due diligence list, and what kind of qualities do you want to see from a founder?
Yeah, I think that's also why I defined the three-pronged approach for myself, is because I needed some way as an entry point to define the strategies that I'm looking for. And just creating that thesis for myself helps me with approaching the conversation. If they take 2 out of 3 of the boxes, I would listen and try to understand, are there ways to help them grow so that all 3 can be ticked? If it's an all-male team and they never really thought of it the way I've thought of it in terms of, inclusion from a gender standpoint, are they open to sort of exploring that, finding a co-founder to help balance that? There's money on the table. And I feel like there's a lot of folks that leave money on the table because they're not able to package what they're doing well enough to the audience that needs to hear it. And when I think about impact investing, Africa just screams impact squared to me. I mean, everything we do because of our community nature is impactful. When you help the head of the household, you're helping 10, 12 other people who they rely on the head of the household for everything, right? So there's a natural multiplier effect, with innovation that happens on the continent. I think from a diligence standpoint, for me, to Isaac's point that you mentioned, I look for portfolio companies that complement my entire sort of build out. I invested in a company called AR Initiative, and they started off as a sustainability consulting firm, helping UK-based Africa companies or UK domiciled African companies with their ESG disclosures, given the new SFDR rules on ESG. And then as we were sort of building this, I kept thinking, yes, I love what you're doing and I needed to do it for my portfolio companies, but how do we take all of this back end work and move it up front into the diligence in the beginning, so that if I invest in something, the natural outflow of the company is stuff that we would already measure when you do the stuff on the back end. And so we sort of redefined, and now I'm using them as a due diligence, tool to be able to sort of vet opportunities that can authentically say that they are impactful, either environmentally or socially as well. And so having and building metrics, having and building what to expect on the down end and bringing it up front has been very helpful for me in teasing out the types of opportunities I would want in my portfolio and the ones that I wouldn't. And so that's how I've been able to sort of evolve over time. Like, again, none of this stuff, I didn't plan it. It wasn't a strategy that I had in my head. But as I was going along, I was starting to identify pockets and spots of opportunities to find synergies across the portfolio that provided value overall. So that's the methodology that I've been using to sort of due diligence and identify founders. And I would just say, lastly, I love two-time founders, especially the ones that have institutional backgrounds of working in a corporation and having been trained, you know, in an organization and now spun out to do it. When you have both, I've seen that those guys are perfect executors. I mean, obviously you have your oddballs here and there, but they've been really great in being able to take their industry experience as employees and workers, translating it to their second founding opportunity if they're a second-time founder. And they usually have a very clear vision and path of how they want to be able to execute their strategy.
Fantastic, thank you. Isaac.
Yeah, really, like, I couldn't agree more with what Kunle has said. And I'd say not every startup or startup founder is investable. In fact, many aren't even investment ready. But I could still do them. Like if the person is like willing to learn, right? Like give that situations where this is like literally diamond in the rough, and I'm like, well, but I could use this service right now. So I would do it, and like we'll work with the person to get it to where it needs to be, and then get them like into accelerators and code to get them exposure to other people that would train them, because they have to continually learn. Now, my ideal founder or startup to invest in would be one that I don't have to put in much work. Like, the person gets it. The person is responsive. I've passed on a couple of investments in the past where I say, what's your last investor? Maybe we're in the conversation like, oh, would you send investor updates? And they're like, yeah, we send investor updates. Like, send me your last investor update. And then it takes like 2 weeks to send it. I'm like, okay, either you never actually sent it and you're just lying to me. Or, like if it's like taking you that long to like get back to me, then maybe you're not like, the right person to back. And so my ideal founder is, someone that potentially is willing to learn and can turn around requests pretty fast. Or, already, as Kunle mentioned, like, either founded a startup before and has been through the experience and so knows it. So if you're doing a deal, like, it's good to have a deal room. And the deal room can be as easy as like, like a Google share drive and a doc laying out what's in the room, like your certificate of incorporation, like some information about the founder, maybe a link to their LinkedIn page, the pitch, but most times like everybody just throws around the pitch deck, and I'm like, forget the pitch deck, forget trying to pitch me, like just tell me what you guys do. I'll probably look you guys up and get someone to, I did diligence on a South African startup recently, and it was pretty, in fact, I'll talk about two. South African one, I called someone else that I've invested in, Zanele of Ewaleifoh, and I said like, hey, can you help me like use this platform? And she's like, oh, I actually just use them, and I love them. She gave me all this reference, and she's like, oh, they actually were in this other program with me. Send me like all the information that I needed, right, to like get comfort to proceed. The other one was is the UK deal. If anyone has ever considered investing in a startup based in the UK, like that is the best country domicile of any startup you can imagine, because they have an amazing public resource called Company House, right? Like literally you can go in Company House and see like like they have to like file stuff like every year with Company House. So you go in there and then you see like, if people talk about like, oh, what's on the cap table? Well, like if you go in there in Company House, you can see like who's invested in a startup, like at various stages that they invested in. So you could literally go look up like your favorite UK domiciled companies and see all the information there. So for me, that is like, that was an easy one for me, because I got that company, looked it up on Company's House. I saw the folks that were on their cap table that invested in them, then looked up those people's website. I'm like, okay, these guys are venture backed. They're also an angel group backed. And then that opened up like all the resources and information I need. By the time I ended up chatting with the founders, they're like, wait, how did you find all this information about it? I'm like, you're a UK company, so Company's House is my starting point, right? Like, and so find those resources either online if they're readily available, or use local angel networks or your own connections, right? Like, LinkedIn, Twitter, find people that are already investing in that market, and then help them to get validation. Because sadly, this is about money, and a lot of times, like, people are throwing out false information out there to get you hooked. So be very careful. Diligence is important. Don't outsource diligence to just hearsay. And that's what I'll say.
Thank you very much. So let's talk about allocation here. So we have an early stage startup, most probably has already family and friend in the cap table. They have a goal to expand even to IPO very soon. So very soon they're gonna start seed round, get institutional investors. So they will be very much careful about the number of investors in their cap table. But they may be interested in 5, 6 impact and angel investors, but they are not keen necessarily to put 3 page or 4 page of angel investors in their cap table. So for founders who are interested about the number of investors in the cap table, or maybe giving out equity, but also in contrast, they are getting advice from investors that will help them to expand the scale up. What alternatives are there? So you spoke about syndicated fund. What would you advise to a startup founder who's keen to get angel investment but is afraid of getting so many investors in their cap table? What would you advise them?
And Kunle, I can take that one quickly, because look, on the continent, we now have solutions that do this, right? Like, so I mentioned Get Equity. Get Equity is one, and almost 40 startups have leveraged them and are actually leveraging them now. But you also have DABA, right, which is more geared towards folks in the diaspora investing in continent. But DABA does the same thing, and they've done that successfully for a number of startups, and several other ones are raising on there. And Boom and Anthony are doing a great job with that platform. And you have Polar Space too, right? Like, I think out of Eastern Africa, and doing exactly the same thing. And I think you increasingly see more of those. Now, outside the continent, obviously you now have things like AngelList that founders domiciled in the US can do, and do like a roll-up vehicle in AngelList, and I've participated in a couple of those. And then obviously you have Republic and WeFunder. Most importantly, founders should be cautious, right? To ensure like they're aware of like the fees, and probably have like someone sponsoring as a lead investor in any of this stuff. And ideally you should organize like a Q&A to get people to ask you questions, because it's not just enough to say like, oh, I'm going to go to Republic or WeFunder and try to raise. Your raise will probably not happen, right? And like some of those platforms even have minimums that you have to meet. So imagine trying to, one founder whined to me about something. They tried to raise 50K or 100K on one of those platforms. They only got to 30, and it was like 3 months in. And they had to kill the raise there, but they couldn't withdraw their funds from this platform because, well, it has to be 50 minimum. And then, well, you have investors that are putting this much money, and we're hoping to have representation, but they're like, well, we probably have to return all the funds to the investors. So it's like, can be heartbreaking to investors too. And that's why most times people just go with like syndicates, because they're like, well, the syndicates would sort of like protect you. But again, most syndicates would have the concept of carry, which is like an incentive or performance fee on your outcomes. And some of them, Lagos Angel Network, Oak and the rest have annual membership fees. So again, look into the fine print, get the details of the fees, make sure you're comfortable with the fees before you proceed. But there's many alternatives now, both on the continent and outside of the continent.
Thank you very much.
The question that you asked is actually a personal goal of mine. Eventually, Isaac and I are not founders. We're not big funders, managers. We understand our place in the ecosystem as a bridge or a connector or a translator, either for foreign capital looking to deploy on the continent, or opportunities on the continent looking for capital in that regard. My personal goal and where I'm trying to reach to ultimately is, if a founder came to me and said, I have 1.5 million pre-seed on a business, if I liked it, what I'm working on the other end is building a community of allocators, fund managers. And if they say, this is a waste recycling business, I can turn around and say, I know 4 or 5 strategic investors that this is what they do. And if I like it and I'm committing my small angel check, most likely they can help you clear out your 1.5. It adds value to the founder. Now your fundraising cycle has gone from 1 to 2 years to possibly 6 to 8 months, aligning your strategy with allocators that really understand what you're doing. And that's where eventually I want to get to, right? Being that middle person that a founder can come to and say, here's my pre-seed. It's small enough that I know that I can find 5, 6 people who can write the checks to be able to fill that ticket size. And so I'm constantly working on this. I'm not there yet. You know, I still need to build more relationships with fund managers and be able to understand their strategies. But again, part of it too is if I can identify what a founder needs for your cap table, it's making your cap table small in the beginning and finding very strategic allocators who understand your business so that it's not just the check that they give you, it's also sort of intellectual advice that they do on a daily basis, either from other opportunities that they invested in, to be able to provide you with that context as you continue to build as a founder.
Fantastic. So Isaac, you touched about AI this year, but last year, for example, 2021, African startups raised $4.8 billion. This year is about 5.4 as per our friends Brighter. What is your expectation? As you do that, I will also ask our audience to participate in this poll.
So
what is your expectation for the Africa tech ecosystem this year?
I think this year we would raise more than we raised last year. So yeah, I'll go with like the 6 billion number, and potentially more. And the reason why I say that is like in the scheme of things, like what was raised by Africa is still like very marginal, like yeah, like 1% or less of the global raise. So it's still nothing. We're still like very early stages, and the train has left the station. So the opportunities will continue to be out there global. It will now be investors now have like Africa, India mind, right? It's now about like, okay, what are the best opportunities to deploy to? So even though we're in a challenging fundraising environment and more challenging exit environment, i.e. the IPO market is still short, many African startups are still in their very early stages, and the ones that are mature are sort of good because they're like they have decent enough cash flow to keep going. So I think we'll continue to see more deal activities, whether it's from angels, like newer funds allocating more to Africa, as well as like startups, accelerators and other programs, or foundations and co, like allocating more funds to the continent. So I expect there to be an uptick, despite the environment, but not much of an uptick, because even with my portfolio companies, we're seeing the folks that don't really want to raise, where they're getting inbounds, right, saying like, hey, we still want to meet with you and want to learn what you're doing and get allocation in your future round, whenever that is. So
yeah, thank you. Kunle, what is your expectation?
I think I'm very much in line with Isaac, but I also know that we're not in isolation of sort of the global ecosystem as well. And, I'm yet to see how 2023 sort of evolves. Obviously, I think end of Q1, I'll probably have a better sense. But I think in terms of funding and allocating to the continent, I don't think that momentum will stop. The needs of Africa is a little bit nuanced and different from sort of the global needs and where funding is being used in some of these countries. And I think on a fundamental level, the capital that's flowing to Africa is really for very core foundational type of businesses. And I don't think that will change, right? Because of the economic landscape, it doesn't mean that people don't need to eat, or people don't need better way to transport, or people don't need better way to bank, the unbanked. So I still feel funding will flow. And I'm really excited about sort of the increased awareness in investing on the continent, because that's what we need more, especially with the diaspora. Can you imagine if we just mobilized all the diaspora money that goes to the continent on a yearly basis, and that was in a fund, and we deployed it into strategies that sort of make sense in terms of our growth. That could be its own GDP in its own right. So I think there's a lot of power and a lot of the capital that we have in the diaspora sector, and we should be a lot more thoughtful about how we deploy that capital into solutions that sort of bring us out of issues that we've been facing for a very long time.
Fantastic, thank you so much. I was looking into the audience question. Kunle, thank you so much. I see that you already answered some of them. Let me just pick one. So obviously, politics can be turbulent anywhere in the world, but how do angel investors weigh the politics of local African governments in their decision making? Do you want to pick that as? Obviously, you have a startup. You're interested. Once Citibank investor said that African startups have a big company credit because of their ingenuity, but also there is a discount because of where they are, political risks, so to speak. So how do you go about political risks of investment startups wherever they are operating in Africa? Do you take that into account in your decision making? And if so, how does it impact your investment decision?
I'll answer this very quickly, and this is my own personal. I stay away from it. Anything that involves remotely the government being able to get in there. I'm trying to think of a world where we can find an alternative to government's role as a whole, and I actually feel that sort of the internet and more broadly the ability to plug into the digital economy allows folks to answer to sort of a higher level of governance and a higher level of sort of audit requirements, right? And I'm making this up, assuming you have a startup on the continent that services people across and around the world. You're not going to be limited by what's happening on the African continent. You're going to be a lot more thoughtful about the global landscape and how to sort of plug into that ecosystem broadly. And if we can get to a stage where, I don't know that this is the answer, but this is something that I definitely think about, where a lot of our population is plugged into that ecosystem, where you can find a job working for Google on the continent and you don't have to leave, right? Like you can get a job and Google's domiciled, in California, but you can get a job on the continent working for Google. Sort of, it then starts to redirect the way resources flow into the continent, because now you get paid from someone else in another continent. You have better ways of your cost of living or addressing that is not answering to the government holistically. But again, these are things that are evolving for me, right? I don't think I have the right approach or answer yet, but something that I constantly seek for is how can we find ways to light fire under African governments, but to make them realize like people don't really rely on them as much as they think anymore. And we need to be able to understand that the governments need to actually get their acts together. The way I've been describing, I assume the payment levels at 10, and we need to bring it down, the government's job to bring it down to 0. There's a space for private markets and angel investing to bring that down to at least 8 or 6, while we still need to figure out with the government how to bring that down all the way to 0. But taking the level from 10 to 6 is pretty significant for a lot of people who are still struggling to eat, are struggling to find work, are struggling to find other things. And in the interim, how can we just add as a stopgap private market solutions to be able to get there as we continue to work with them more holistically? But I think someone wrote in here, lack of trust. I think that's just the biggest thing. Governments on the continent have broken the trust of a lot of people. So it's just not there. And for any economy to grow, trust needs to be very front and center of how you grow the economy more broadly.
Thank you very much.
Yeah, I'll quickly add, look, I consider country risk, and I try to ensure like I don't have too much concentration in one place, and that's a huge part of like why at some point I was like, okay, like no more US deals for a bit, and plus last year I'm like no more Nigeria deal for a bit, not just because of like the politics, but also like currency devaluation. We really did the Ghana deal late last year, and I'm like no, not anytime soon. So again, like move towards now. I did it. As mentioned, did a deal in Canada. Done 2 now in the UK. Latest deal was in South Africa. So like pushing across the country risk to ensure like there's not huge concentration in one country, because I mean, political risk can be anywhere, like even in the US, right? Like, like you get parties changing and then indecisive governments and that affecting the markets broadly. So it's always nice to stay diversified. And so I factor in country / location as well as, like sector and the rest of the other diversification factors when I look at like deployment.
Thank you so much, gentlemen. I want to be respectful of your time. So maybe before we wrap up, we have so many early stage startups, some of them part of our Alpha Expo at the Africa Fintech Summit. Any last word, advice, wisdom you want to share with early stage founders as they scale up, as they look out for external investment, angel impact investment? What would be your last word of advice?
I'm gonna let Isaac go.
Be prepared. Like the rising tide will lift all seaworthy boats. So if you're not ready, you'll be wrecked.
And I think mine is just be very clear on what your business model is. Oftentimes I talk to founder and I don't think they have a true understanding of the problem that they're trying to address. They have the passion and they have the desire, but I think it also ties to Isaac's sort of be prepared, right? Get your business into a stage where like every single part of it, because you will face investors who will test you on it. And most times first impressions last very long, and the ecosystem is so small that Isaac can call me, what do you think about this person? And maybe my opinion matches the way he thinks about it, and it's a done deal for him, right? So make sure your first impressions definitely hit the nail on the head and people have a very clear perspective on what you're building and the problems you're trying to solve for.
Fantastic. So Kunle, Isaac, thank you so much for your time and for your wisdom that you've shared. Very much appreciated, and we're very much grateful for all of you who joined this webinar. We'll come up with another Ask Investor webinar next month and we'll share the details. Thank you so much, and have a lovely day.
Thanks for the opportunity. Yeah.
Thank you.
Bye, everyone.
Bye, Zach. Bye, everyone.